Goldman Sachs and JP Morgan are not just buying XRP ETFs. They are operationally running inside the Ripple Treasury dashboard right now, Goldman's Mosaic platform giving institutional clients real-time access to 200 plus money market funds across 7 currencies without leaving the Ripple environment. JP Morgan feeding real-time balance data through its Account Balances API into the same unified dashboard. American Airlines publicly stated that Ripple Treasury exceeds expectations. Pakistan just removed its 7-year crypto ban and opened bank accounts to licensed virtual asset providers, with Bank Alphallah, one of the country's largest private banks, already running on Ripple rails. And XRP is up 7.12% on the week with $1.81 billion in combined spot and futures volume in a single session. Tonight, we build the complete picture of what is actually happening. Tonight, this is a complete breakdown structured around the 4 developments that together represent the most concentrated institutional validation week in XRP's history. First, the Goldman Sachs and JP Morgan Ripple Treasury integration. What it actually is technically, what it means that this is operational infrastructure rather than a partnership announcement, and what the G Treasury acquisition context tells you about where this goes next. Second, the Goldman Sachs 13F positioning, the $153.8 million across 4 XRP ETFs that makes Goldman the single largest disclosed institutional XRP holder in the United States, accounting for 73% of all disclosed institutional XRP ETF holdings, and why the May 13th next 13F filing is the most consequential institutional disclosure calendar date in the XRP market right now. Third, Pakistan's crypto ban removal and what the Bank Alphallah Ripple connection tells you about how Ripple's pre-positioned infrastructure converts a regulatory shift into immediate transactional volume, specifically for the 6th largest remittance receiving country in the world. And fourth, the $181 billion volume session, the Ichimoku cloud flip on the hourly chart, the cost basis wall at 144 that 60% of circulating XRP sits above, and what the technical and on-chain data together say about whether this price move has legs or is running into the precise resistance level where the most concentrated selling pressure in the market lives. This is not financial advice. Nothing here is a recommendation to buy, sell, or hold any asset. This is educational analysis based on publicly available SEC 13F filings, Ripple Treasury product documentation, on-chain data from Glassnode, and documented institutional partnership records. Always do your own research and consult qualified financial professionals before making any investment decisions. If this is the channel that tells you JP Morgan is running on Ripple rails today, not in a pilot, not on a roadmap, today, hit the like button right now. Subscribe with the bell on. Let's build this completely. Start with the Goldman Sachs and JP Morgan Ripple Treasury integration, and start with the specific distinction that determines whether this is meaningful news or not. Goldman Sachs and JP Morgan did not publish a research note about XRP. They did not issue a press release with a photo opportunity announcing a strategic partnership. They plugged directly into Ripple's Treasury operating system as live banking data partners. That is a categorically different kind of institutional validation than anything the XRP community has previously received, and the distinction deserves precise explanation. Ripple Treasury, built on the G Treasury Foundation following Ripple's acquisition, is a treasury management system used by corporate treasurers at companies including American Airlines to manage cash positions, execute payments, and monitor portfolio holdings. Goldman Sachs's Mosaic platform is the investment platform used by Goldman's institutional liquidity teams to give clients access to money market fund trading across global currencies. The integration connects those 2 platforms directly. Corporate treasurers using Ripple Treasury can now access and trade across more than 200 money market funds in 7 major currencies without leaving the Ripple environment, with 0 additional integration cost for existing Goldman account holders, with automated real-time ledger syncing that eliminates manual reconciliation, and with unified visibility across cash positions, money market fund holdings, XRP balances, and RLUSD balances in a single dashboard. JP Morgan's Account Balances API feeds real-time balance data into the same unified environment. Goldman on one side, JP Morgan on the other, XRP and RLUSD sitting alongside fiat in the middle, managed with the same real-time operational discipline as traditional cash positions. American Airlines, which is a live Ripple Treasury client, publicly described the platform as exceeding expectations. That is a Fortune 50 company's treasury team endorsing an XRP-capable treasury management system that now has Goldman Sachs and JP Morgan as live banking data partners. The G Treasury acquisition context makes the trajectory concrete. Ripple acquired G Treasury to add enterprise treasury management capabilities to its product stack. The result is a platform that manages Swift-connected fiat payments, XRP and RLUSD digital asset positions, Goldman money market fund trading, and JP Morgan balance monitoring in a single unified environment. This is not a bridge between traditional finance and blockchain. This is the integration of blockchain-capable infrastructure into the daily operational workflows of the corporate treasury teams at real companies managing real institutional cash. That operational daily use, Goldman's Mosaic trading executing, JP Morgan's balance data flowing, XRP and RLUSD sitting as first-class assets alongside cash in the same dashboard, is the institutional legitimization that no amount of ETF inflow data can replicate. Comment operational below if you understand why this distinction matters for the thesis. Now, the Goldman Sachs 13F positioning, because this second layer of Goldman's XRP exposure is analytically distinct from the Ripple Treasury integration and deserves its own precise treatment. Goldman Sachs's Q4 2025 13F filing disclosed $153.8 million allocated across 4 spot XRP ETFs, Bitwise, WisdomTree, and 2 others, making Goldman the single largest disclosed institutional holder of XRP ETF positions in the United States. That $153.8 million represents approximately 73% of all disclosed institutional XRP ETF holdings, meaning Goldman's position is nearly 3 times larger than the combined holdings of the next 29 institutional XRP ETF investors. Alongside Goldman, Millennium Management, Jane Street, and DRW, 3 of the most analytically rigorous institutional trading operations in the world, are all disclosed XRP ETF holders. None of those firms made that decision by accident or by sentiment. Their investment committees require documented due diligence frameworks and return thesis articulation that the compliance and risk management teams approve before capital is deployed. Every one of them reviewed the XRP thesis, the ODL corridor adoption curve, the regulatory clearing, the DTCC integration, the institutional custody infrastructure, and concluded that the risk-adjusted case for XRP ETF exposure is defensible to their investment committees. The critical forthcoming data point, Goldman Sachs's Q1 2026 13F filing, is due May 13th. That filing will disclose whether Goldman maintained, increased, or reduced its XRP ETF position through the 40% drawdown from the late 2025 highs. The Glassnode data adds context. Approximately 36.8 billion XRP, roughly 60% of circulating supply, has a cost basis above current market prices, with the average cost basis for this group sitting near 1.44. XRP is currently trading at 1.445. That means the price is running directly into the most concentrated cost basis cluster in the market, the level where the largest number of underwater holders can exit at break-even or slight loss and where selling pressure is structurally highest. The May 13th Goldman 13F disclosure is the institutional signal that tells you whether the largest single disclosed institutional XRP holder bought the 40% drawdown or reduced exposure through it. Both outcomes are analytically significant. Maintained or increased position confirms institutional conviction through drawdown, the strongest possible signal for the thesis. Reduced position requires reevaluation of the institutional demand assumptions that the thesis is built on. May 13th is the date to mark. Now Pakistan, because the geopolitical and remittance economics here are more significant than the Pakistan lifts crypto ban headline conveys, and the Bank Alpha Law pre-positioning makes it immediately commercially relevant rather than just legislatively significant. Pakistan is the 6th largest remittance receiving country in the world. Hundreds of billions of dollars flow annually from the Pakistani diaspora, concentrated in the UAE, Saudi Arabia, the United Kingdom, and the United States, back to family members in Pakistan. The current remittance infrastructure for those flows charges between 5 and 8% per transaction, requires multi-day settlement windows, and offers limited transparency on FX rates and bank fees. Bank Alpha Law, one of Pakistan's largest private banks, has already implemented Ripple's payment network for cross-border transactions, specifically launching with Lulu International Exchange for UAE to Pakistan remittance flows, targeting the Pakistani diaspora in the UAE that represents 15% of the UAE's population. The regulatory significance of Pakistan removing the 7-year crypto ban is that Bank Alpha Law's existing Ripple implementation, which was operating in a legally ambiguous environment, now has a clear regulatory pathway to scale. Other Pakistani banks that were watching Bank Alfalah's implementation from the sidelines while waiting for regulatory clarity now have the statutory green light to evaluate and deploy similar infrastructure. Pakistan's government specifically described AI and crypto as tools of the future in the announcement, framing the regulatory shift as part of a broader economic modernization agenda rather than as a reluctant accommodation of market demand. Ripple was already positioned in Pakistan before the ban was lifted. The pre-positioning means that when regulatory clarity arrives, Ripple's commercial teams are not starting partnership conversations, they are accelerating existing ones. That acceleration converts the legislative event into transactional volume faster than any competitor starting from zero. The sixth largest remittance corridor in the world, with pre-positioned Ripple infrastructure, a major bank already live on the network, and a government that has just explicitly endorsed crypto as a policy priority. That is the Pakistan opportunity stated precisely. Now the XRP volume data and the technical picture, with the honest assessment of both the bullish case and the specific resistance that sits directly at current prices. XRP recorded $1.81 billion in combined spot and futures volume in a single session. Futures dominated at $147 billion, spot at $341 million. Spot volume at $341 million in a single session is the signal that real buyers are showing up rather than derivatives positioning driving the move. The distinction matters because futures volume reflects leveraged positioning that can reverse rapidly, while spot volume reflects actual ownership transfer. Someone paid dollars for XRP and holds it. The Ichimoku cloud flip on the hourly chart, the Kumo twist turning bullish with the cloud confirming, is the technical signal that the short-term momentum structure has shifted from bearish to bullish. XRP ETF spot volume came in at $18.12 million on the day, led by Bitwise with Franklin Templeton second. The honest counterpoint, XRP is currently trading at 1.445, directly into the 1.44 cost basis cluster, where Glassnode identifies approximately 36.8 billion XRP sitting with underwater or break-even holders. That is the most structurally significant resistance level in the market because it is not chart-based resistance. It is cost-basis-based resistance, meaning real holders with real positions at real prices are making real sell decisions at exactly this level. Breaking through 1.44 to 1.45 on sustained volume is the signal that new buyer demand is absorbing the break-even selling pressure. Holding above 1.45 on a daily close converts that resistance into support and opens the path toward $1.50, the symmetrical triangle breakout target that analysts have been mapping since early April. The $341 million in spot volume is a meaningful step toward the absorption the market needs to clear the 1.44 wall. Whether it is sufficient to do so in this session or requires additional accumulation sessions before the breakout confirms is what the next 72 hours of volume and price action will tell you. Now XRP in Asia, because the trading volume leadership in Japan and South Korea tells you something about institutional and retail understanding of the XRP thesis that North American market data does not capture the same way. XRP is the most actively traded cryptocurrency in Japan, above Bitcoin, above Ethereum, above every other digital asset. Japan's largest financial institutions, including SBI Holdings, have built significant XRP positions and infrastructure integrations over the past 5 years. SBI VC's published data showing XRP's 6-year gain at 987% against Bitcoin's 1,500% and Ethereum's 2,000% is the kind of long-term return data that Japanese institutional investors, who manage some of the world's largest pension and insurance funds, use to evaluate asset class inclusion. In South Korea, XRP trades above Bitcoin and Ethereum by volume on Upbit, Coinone, and Corebit, the country's 3 largest exchanges. Korea's financial institutions have been building XRP infrastructure in documented stages. BDAX launched regulated XRP custody across all 3 major exchanges, and Kyobo Life Insurance became the first Korean insurer to pilot tokenized government bond settlement using Ripple infrastructure. The Asian institutional understanding of XRP's role as settlement infrastructure for cross-border payments and tokenized assets is more developed than the North American understanding, because Asian markets have more direct exposure to the cross-border payment pain points that XRP's ODL mechanism solves. The diaspora remittance flows, the multi-currency settlement complexity across 35-plus Asian currency pairs, and the institutional demand for a neutral bridge asset that does not carry sovereign currency political risk, These are the use cases that Asian financial institutions have been evaluating for longer and understand more concretely than their North American counterparts. Here's the complete picture of what this week's data points mean when you connect them correctly. Goldman Sachs is inside the Ripple Treasury dashboard as a live operational banking data partner, simultaneously holding $153.8 million in XRP ETFs as the single largest disclosed institutional XRP holder in the United States. Two completely independent and additive forms of institutional XRP exposure that together represent operational adoption and financial investment simultaneously. JP Morgan is running on Ripple Rails through the account balances API integration, not in a pilot, operationally, today. American Airlines is publicly endorsing Ripple Treasury as exceeding expectations. Pakistan lifted its 7-year crypto ban with Bank Alpha already live on Ripple's network, positioning Pakistan's 6th-place global remittance receiving status for institutional scale ODL deployment. XRP traded $1.81 billion in combined volume in a single session with $341 million in spot. Real buyers absorbing the 1.44 cost basis wall that is the most structurally significant resistance level in the current market. And the May 13th Goldman Sachs 13F filing is the next institutional signal date that tells you whether the largest single institutional XRP holder bought the 40% drawdown or not. XRP Las Vegas opens today. The FOMC decision is tomorrow. The Clarity Act markup window is this month. The DTCC second half 2026 service launch is building. Every one of these is a documented present tense development. None of them requires a conspiracy to function. All of them are moving simultaneously. Smash the like button if this gave you the complete picture. The Goldman operational infrastructure distinction versus the ETF position, the JP Morgan account balances API detail, the Pakistan remittance economics, the cost basis wall at 144, and the May 13th 13F filing as the next institutional signal date. Share this with one XRP holder who thinks Goldman Sachs buying ETFs is the whole story, because the Mosaic integration running inside the Ripple Treasury dashboard is a categorically different and more significant form of institutional adoption, and understanding the difference is what separates analysis from headline reading. Subscribe and hit the bell because XRP Las Vegas starts today, the FOMC is tomorrow, and the May 13th Goldman 13F is 13 days away. Tell me in the comments, do you think Goldman Sachs maintained, increased, or reduced its XRP ETF position through the 40% drawdown? And what does your answer tell you about your conviction in the institutional demand thesis? See you tomorrow.